Welcome back to Crown's Crypto Cave and another little relaxed type of video this morning as I'd like to wrap up the week's action and set you off before you go on to head out for church on a little Sunday morning. But first things first, got to talk about some magic internet money. So with that said, let's jump right on into it. Okay. This week has been pretty damn interesting to me as what started off as a potential reversal coming on off of your 6150, 6100-ish lows down here is now morphing into what looks to me to likely end up in a rejection. The way that this has sold off in the last 24 hours, and keep in mind I was actually not present at my computer in the last 24 hours, is extremely reminiscent of the last big breakdown we had from about that 7600 level over here. So first things first, I want to zoom in on this action right here. Now, yes, by all intents and measurements, we did have an inverted head and shoulders going on all the way up until this area right here. Neckline was 64.40, and we can represent that. Oh, and if we go over here to my MEX chart, it'll be even better. There we go. We can represent that by this horizontal trend line right here at about 64.40. That was broken a couple days ago, and since then, you saw a little bit of continuation, getting up to your next resistance trend line, testing your 100 exponential on your 4-hour chart, but rejected and shoved right back down the neckline. Now, here's one of the big things that I'm a strong believer in. While we were living above this trend line up until yesterday, like literally right before I left my battle station for the day, it was okay. It looked good. You know, anytime that you take out that neckline, you respect that. You know, the path of least resistance is typically upwards and onwards. However, anytime in my experience that you have a failed breakout, it's extremely bad and leads to a counter move quite quickly. So I believe that we are in the midst of seeing this right here, right now. And funnily enough, this is actually extremely reminiscent price action of what we did, again, over in the 7600 breakdown about a couple months ago. So I'm going to pull out the time frames over here. And again, just put this in your mind's eye, and I'm going to put you back about a couple months ago, get in my time machine. Here we are. Look at that. Isn't this similar? Isn't this actually almost identical? Now, again, when it comes to analyzing price action, I don't believe that you can do it one to one. It's not, historical analysis is not one to one. You can't analyze it candle by candle like some analysts will have you believe. That's extremely misleading. However, the overall shape and the overall structure and the way that it acts along that structure is applicable over time. And we have something very similar over here. We have an inverted head and shoulders over here. We even have a double left shoulder. We even have a double right shoulder and a nice little head action down here. Now that kind of head. Then you would have had your neckline right here at about 75.80, and I'm gonna actually draw this one so we can do it together and just go over the similarities here. And what happens after that? You break out over here. You spend a couple days living above the neckline and testing your 4-hour 100 exponential right here. Again, is this just coincidence? Perhaps, but it's the overall shape of this that I'm concerned about. And once you get shoved right back down your neckline, very, very bad. Again, anytime you see a failed breakout, it leads to a very large counter movement extremely fast. What happens after that? We actually teeter around this area for quite some time, like another couple days looks like, and put in some sort of we actually put in some sort of a triangle going on right here. Depending upon your disposition, you could say that this is a rising wedge or ascending triangle. Again, I don't really give a fuck what you call it. What I'm concerned about is how we react upon supporting resistance, and then we end up dumping pretty damn aggressively all the way from 7,600 down about $1,000 in the span of a day. It looks like a day or two. So again, this is what is extremely concerning over here, as we do have a reversal pattern in place. However, it has been negated. It has been violated. And while we might teeter around here for a little bit longer, again, I'm not, you can't look at these things one-to-one over time. I would think very likely that we do get thrown the other way pretty damn fast. And when I say the other way, I mean downwards. Now, of course, it's not, nothing's ever just a straight shot down. There will be support along the way. Or at least you'd hope so. That's if everyone pulls their bids. But you got this area right here, 62.50. You got this area right here, 61.20. And, of course, your prior low at about 58.50, we'll call it. So all those areas, I know people, for some reason, people like to catch a knife and trade the counter trend movement. Funnily enough, that doesn't really work out too well in my experience, or at least it does, a few times, and then it just needs to hurt one time to make you not want to do it again. So yeah. Again, obviously, if we were to play out anything remotely similar to that last one that I just pointed towards, it would blast through all of these guys, taking us down to, what would it be, about 5,600, 5,500, something like that, which could certainly make sense. So again, this is what we're dealing with right now, and this is what really does concern me about the action of the past 24 hours. So again, the week up until yesterday was pretty okay. It was pretty okay, but this never good. And I'll show you one more example of what can happen when you do fail a breakout of a formation. And we watched this one together not too long ago, and essentially we had over here, going to my GDAX chart, we had a falling wedge, and we actually confirmed a breakout, again using the bodies over here. We confirmed a breakout over here, and then guess what? It was just a couple of candles later that we actually came back down, broke it, and then look at that, a $2,000 move from top to bottom, essentially. Again, definitely never a good thing when you fail a breakout. Also, let's go along the higher time frames, back on over here to MEX and taking everything off. You can see very clearly that your 3-day, to me, looks like a bunch of wicks to the upside. I typically don't like it when I see a bunch of wicks to the upside in a row. It typically represents a lot of sell pressure, and there's someone defending the 6,500 region right here. The 2-day, same sort of thing. If we go on MEX, obviously it's gonna look a little bit different because there's not as much price history, so the exponentials act differently. But we'll go over to a more historic exchange soon. But you can see here that someone is defending this purple 200 exponential, always a point of contention, and the fact that we're living below it is extremely, extremely, extremely concerning. Especially the way that it's been rejected. I mean, again, remember, each one of these candles represents 2 days of price actions. This is quite literally, almost 2 weeks of what's of going on down here. Or I believe it is 1, 2, 3, 4, 5. So 5, yeah, almost, yeah. Okay, so almost, yeah, 10 days, almost 2 weeks. Close enough, Just do a little bit of head math. Anyway, let's go over here to stamp. It's going to be represented differently, and you can see here we're nowhere near the 200 exponential over here. But funnily enough, or maybe not funnily enough, depending upon your positioning right now, your 2-day chart is about to signal some extremely bearish things. Again, if you're in the technical analysis program, you know exactly what I'm talking about. But I'll kind of point out and give a little Easter egg to some people around here. This yellow 21 crossing the downside of your simple 30, definitely never a good thing. Your green 55 exponential getting ever so close to your purple 200 exponential. If price action doesn't pick it up right here, right now, you will get a death cross on the 2-day dilly chart, and it will be bad. And going back on over here to the daily, I want to talk about this for a second as well. We've been governed by our yellow 21 exponential for quite some time now, having a lot of trouble getting around there. So again, not a good thing, and more importantly, this blue simple 30 moving average, if I can get my words out properly, is now aggressively angled downwards. Now, this is when it comes down to it, when I'm looking at like the overall market direction, and when I'm wanting to figure out, about when the next move is going to come, this is actually one of the things that I put one of the most importance on. Not the most importance, but one of the most important. Everything is be used in confluence with each other. And over here on your daily chart, you have a lot of very concerning things. Not only do you have the 21 under your 55, you have, if I put on my, or you're also living below your red 200 simple moving average right there. If I put on my 10 simple moving average, which is going to be represented by the red trend line over here, it's below your yellow 21 exponential, also a very bad thing. You can see it's trying to support price action right here. But coming back down to base on it, let's see if this next one holds. If it does not, that'll spell some pretty damn bad disaster, in my opinion. And again, that the slope of this blue simple 30 moving average right here is certainly not a good thing. So while I don't know when this will happen, I don't know how it'll happen. You never know if it's going to even happen or not. I would be leaning towards seeing I would be leaning towards seeing this play out to the downside in the, probably in the next week or so. With that said, of course, there's always, the opposite side of the coin, no pun intended, right? But, but my point with this is that, how do you know that I'm wrong? How would you know, Crown's an idiot. Crown doesn't know what he's talking about. Crown's going to be wrong. Well, if you got above this area right here, this 6,600 area right here, and started closing 4 hours above it, then I think I would be a little bit more, I wouldn't be as convinced. Then, not that I'm convinced to begin with. I'm just kind of leaning towards something. At the end of the day, these are all probabilities. We're talking about statistical trading. That's what a fucking trader does, not this silly, gambling that a lot of people seem to think trading really is. So, also on top of that, kind of the slap in the face signal where I would not be concerned about it at all is if we started, closing these guys above 72, 7,300, that would be a change of behavior to the upside. And obviously this blue box territory right here, but a little bit less important. So again, tentatively speaking, this is the guy that you're looking for. 6,600. If you do get above 6,600, then hey, you actually do have some nice trades, most likely to the upside. I don't see too much stopping you from about 68, 6,900. Maybe you do play out the measure move off this inverted head and shoulders. Maybe it morphs into something like this, like on the 12-hour over here. Or perhaps it's also worth looking at the CME futures contracts over here. And as you can see, I've already done a little bit of artwork. And keep in mind, guys, that the CMEs, they're on a regular exchange where, they have like a trading, they have like open hours, right? So they don't trade all day. People have lives over there, essentially, is what I'm trying to get out. Like they hang out with their kids on the weekend. They have dogs. They have like, they talk to their wives for once. That's something I know nothing about. But you know what? The people who trade the actual traditional markets, they will be looking at something like this. And when you do have opens and closes, you will get price action that creates gaps. And typically speaking, if you're familiar with traditional markets and trading in those, one of the most classic plays is just anytime that a gap is filled, coming from you kind of trade the counter direction from it, and you at the very least you probably have a nice little scalp, and a lot of the times it will produce a decent reversal. So, as you can also see on the CME futures, we do not have that same sort of price action that we have going on right now in Bitcoin. We have not broken, or actually we have a completely different setup, to be honest. If we go over here to the 4 hours, it's a little bit more visually apparent. Yeah, there we go. We have a neckline right around here. So we never did break that neckline at 65.60 it would be on CMEs. And that also offers up the possibility, well, hey, what happens if you do break the CME's neckline? Well, that would correlate with a break of our traditional markets. No, like our our highly altruistic SAFU exchanges over there. No, of course not. But like MEX, that would correlate with an area of about 6,600 or so, the area that we just spoke about. And you can make a measure move off this, and look at that. If you do, it kind of points you right into here, into the middle of 72.50-ish area, which would be this nice gap in price action right here. So hey, to offer up a counterpoint, CMEs have not really lost their shape just yet, but also, your CMEs told you that you never broke out of the neckline actually, so you never got that confirmation of a break. So funnily enough, these things need to be put, one-on-one needs to be put together to come up with the full picture over here, and it's a little bit less optimistic than the one that than the one that we were showing about a couple of days ago on an exchange like BitMEX. So yeah, that's kind of what I'm looking at over here. Let's go to the weekly as well, as we will be getting a new weekly at 8 p.m. Eastern Standard Time. And this weekly is looking okay. We had a nice little reaction off the 100 exponential right here, that cyan line. But again, overall, the picture is pretty damn bleak. So even if we did rally it up right here, I really, 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 really don't like the way that these moving averages are sloped downwards. Again, if you're in the technical analysis program, you know exactly what I'm thinking over here when I look at the 21 and the 55 getting ever so close to each other. Your 30 simple moving average over here is very aggressively angled downward, sloped downwards, I should say. And this, to me, puts like pressure on the price action, like a fumigator, like it's pumping it. Not that kind of pump, but at some point, something has to give. So hey, maybe we do fill out the space a little bit more, but overall, this is a little bit concerning over here. And when I say a little bit concerning, um, again, this always does come with a caveat that, hey, if we do start closing 2 hour, 4 hour, especially 8 hours above 6600ish area, then yeah, I think you got some. And as you can see here, when you go to the 1 hour, you do have a nice trend line right here. So perhaps it was never really the right way to be looking at it from before. But again, that's kind of how everyone was interpreting this. I just want to show, for purposes of thoroughness, why people are thinking that, and what that would kind of lead to. And because we do trade on those exchanges, we do need to be aware of that sort of thing. And technically speaking, it is actually correct. It's just when very few people look at the CMEs, you get the full picture and you understand, okay, well, actually we have something different going on over here, and it's not quite complete to just look at the base exchanges like GDAX, MEX, Stamp, all these sorts of different ones, the very SAFU ones as well. So again, this idea kind of, if I can get my voice back, that'd be even better. Yelling all day yesterday. So if we could get back above 6,600, then yes, that would kind of change the picture in my mind. But again, the way that we reacted yesterday, this selling guy right here, although not that intense. Yeah, the volume on it does stand out a little bit, and for a weekend, it is a little bit higher, relatively speaking, of course. But I just, anytime that you do have a failure along this level right here, very, very bad. Again, that is what's really, really throwing me off about this. Let's go over our other time frames really quickly. 12 hours about to get some pretty damn bad crosses. You can see that your 30 simple moving average is about to cross to the downside of your yellow 20 or yellow 21. However, so that actually should, traditionally speaking, that actually should help price action. However, you can see that they're just both so aggressively sloped downwards that it might be one of those like slight kisses and then roll over. Again, this is it's a chart only a mother could love right now, in my opinion. I shouldn't say that. I'm being way too critical, to be honest with you. I'm being way too critical, but again, my main point here is that anytime you do see a failure of breakout, a failure to follow through, and then shoving it right back down, very, 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 very bad. And again, with market sentiment right now, everyone's thinking up, and even bears are thinking up right now. Bears are thinking, well, we'll probably get to 67, 6,800 and then roll over from there. Or maybe if you're a little bit less bearish, then maybe you think 7,200, like we just showed with the CMEs on that measure move. And fair enough, fair enough. But my point is that and then there's a shit ton of people who think that this is actually going to be the ultimate low. Maybe it is. Again, I can certainly be wrong on this, but I do want to point out this this very concerning action that we just had. All right, what else can we talk about? Where can this go? And what should you be aware of? Well, I'm not going to talk too much about price projection on this stream or on this video. What I'm going to talk about is just areas of interest, and going over our and using our volume profile over here. We can see very easily that, hey, this last line of support right around here, around 58.50, our current low is kind of our last big volume node in this guy right here. After that, we have nothing doing for about 4,600 all the way to about 55, 5,600. So keep that in mind. Definitely keep that in mind as if we do lose this area, it would suggest, looking at this indicator, that we would likely blow right through. With that said, I want to see if other things line up with it as well. Let's put on our trend lines over here. Well, I probably do already have a bunch on. Yeah, this is my stamp chart. So you can already see that, and of course, if you watch my prior videos, you know that I've been looking at this as a bear flag right here. We've already broke it down to the downside, and that would actually offer up a measure move all the way down to about 2,900. I don't know if I can't say that we're going to get there from here. It's, of course, just talking about ideas for right here, right now. And there's obviously going to be areas, beforehand as well. And in fact, what I really want to do? I want to actually put in a horizontal right here, and fill out this blue box territory. And this is the one that I'm really looking at right here. It would be a measure move off this inverted cup and handle, which we actually haven't played out, and perhaps it might actually be. We never really negated it though, because again, to negate it, you need to get back. You need to trade above your breakdown point, and actually you can see that's where our red 200 simple moving average started to really curtail price action over here. So we never really got above this area right here, the one that I'm pointing to. So with that said, that would suggest a move down here. It also lines up with some nice historical high volume areas of interest is what I like to call them. A lot of people doing business around there is what it tells us. Also, we do have some nice horizontals coming in from this area, so you'd imagine that would offer a little bit of support. Also, on top of that, we do have the 786 Fibonacci retracement coming in this area. It's a little bit off right there. And then if I go to my weekly chart, you can see very easily that the weekly does have that purple 200 exponential starting to crawl its way above there as well. So again, yes, there are ideas that lead us a little bit lower, but that's kind of the first one on the map. From what I would say, if, of course, this always comes with a caveat, this always comes with a caveat. So please do understand this, as this is what I fear the most whenever I put up a video on YouTube, is that people will hear one thing without like the contingency. Okay, it's like, it's never a black or white statement. It can't be. Trading is not black or white statements. And that's why I think most people struggle with it and struggle to understand technical analysis, because we're not talking about things that will happen. We're talking about probabilities and statistics and looking for good setups within that. And if we go over here, of course, that comes with some caveats. We have to take out this level first. As long as we're above 58.50, that's so low. It's actually just as simple as that. And I know people will say, well, what the fuck? Don't you have like some backwards somersault flip to do to show me what's going to happen? Well, no. No, it's actually just as simple as that. Now, of course, if you do break down from this area right here, you're going to be notified about that well beforehand, most likely. If you break below 62.50, that's going to be a pretty damn big red flag. And if you break below, that's going to be like your yellow flag. And then if you break below 61.20, 61.50, that's going to be like your double red flag, It's bad. It's real bad. So yeah, and then of course on the way, you will have again this area right here at about about a hair under 5,000, and you'll actually have likely this area as well, 5,500. So we actually do have some things pointing towards 5,500. If we go over here, there would be. Now, what was I going to say? Yeah, I believe it was this guy right here. Yeah, that's right. Okay, so we have an inverted cup and handle, a very ugly inverted cup and handle, but for all intents and purposes, it does work with one. This would be your handle over here. If I'm going to draw it in, it came in the form of a broadening wedge, and that's completely fine. This would be your cupish formation right here, and we'll make a measure move off that and apply that to the breakdown zone and see where that kind of spits back. And there we go. Okay, come over here. Oh, look at that. Beautiful. And it lines up perfectly with this horizontal area right here, which would make sense. So perhaps that's an area of interest as well. But again, I don't really have too many other things, having that gravitational pull towards those areas. So again, it's one of those things where, okay, we'll have a couple things pointing towards there. It doesn't mean that other things can't come into the market to kind of help fill that out. But for right here, right now, it's, I'd look for probably a little bit of a stop to price action there. But again, when you do get a measured move, it doesn't mean that I think we're going to reverse from there. We could reverse from there. We have to. The only way that we'll know if we reverse from there is if we actually just wait it out. And again, I know it's one of those annoying things that technical analysts, or like at least a good technical analyst, should be very clear about, that you're just not going to know until it actually happens. And the reason for that is you have an example staring you right in the face right here. You had what looked to be, or you did have, a nice inverted head and shoulders break above your neckline, and then it gets shoved right back down. So you got like the confirmation of a counter confirmation essentially. And I know this can get a little bit confusing, and believe me, for myself, who's been doing this for a long time now, it's never easy. It's never easy, and this is what makes trading an art and not necessarily a science. So again, that's kind of what I'm looking at over here, and all we'd have to do to kind of if when we do find a bottom, we're looking for some sort of capitulation. Essentially, what we're looking for to kind of go over a little idea over here would be, here's what capitulation looks like for Bitcoin, right? This is your capitulation on your 2014 market cycle. Here, I'll just pull it out so you can understand. And if you measure it out from top to bottom of this weekly right here is 70%. 70% is just in the span of 1 week. And by the way, I've actually gone through it, and really the majority of that was done in the span of like 2 to 3 days. So 70% in 2 to 3 days is absolutely fucking crazy. Just imagine, just to give you an understanding, if percentages don't work too well with you, if we did a similar thing from here, our current space right here, which again, I'm actually not suggesting that we're going to do it, but just so people understand what capitulation could look like, it would suggest 1 week's worth of action all the way from a little bit below 2,000 to where we are currently. So, as always, a tricky game to be played, and that's essentially what I'd be looking for to kind of denote the ultimate bottom. Then I want to see a reversal pattern being put in place, a little bit of accumulation over a period of time, and then you can get your nice bull cycle getting started. And really, I don't want to be Mr. Scary, don't want to be Mr. FUD. I want to be Mr. Opportunity. I always say this, but I really do believe it, because you can perhaps be, or you might get the chance to be, one of the people who gets to buy in a region like this. And if you know that price action is going to crawl its way upwards and onwards, I mean, you never know, right? You never know. But I would assume that for the people viewing content like this, you probably are a believer in the in cryptocurrency and the technology, or at least Bitcoin. And I would say that I'm at least a believer in Bitcoin. Can't say the same about most things in this scene. However, I would think that all you have to do, or at least kind of my general plan would be to be doing a little bit of accumulation as after we do get this nice guy down here. Now, of course, are you going to get the ultimate low? Are you going to buy the actual bottom? Probably not. There's only one person who really gets to buy the ultimate low, and it's probably going to be the person who actually puts in the damn floor, who has a shit ton of money. So when it comes over here, I'm not really concerned about getting the ultimate low. I'm concerned about getting that accumulation range and getting set up for a more longer term position. So again, that's going to do it for today. Just to kind of wrap it up in a couple sentences, if in case that was too long-winded. Essentially, we have a breakout failure going on over here. We have a breakout failure. We put in an inverted head and shoulders over here. We took out the neckline right here at 64.40. We failed the breakout coming back in. That's my big red flag. That's why I really don't like what's going on over here, and I believe that we probably will make our way lower. But again, that's my opinion. I don't trade my opinion. It's a funny thing. People ask my opinion all the time. I'm saying my opinion is fucking worthless, man. I do technical analysis, so I don't. So my opinion can be right or wrong, and I can still do this as a living. And so of course, how do you know that this idea would be unlikely to be played out? Well, if you got above 6,600 again, that would be kind of more that would be a positive signal. But it's really not until you get above this area right here, this 7,300 area, where it starts saying, okay, we might have something interesting going on here, and the immediate downside is not something to be worried about in this current, at least in my opinion. And by the same token, yes, you do have support here at about 62.50. That's not like a super strong support. It's not a critical support in my opinion. This one is critical. This 61.20-ish area is critical, and below there, this 58.50 is absolutely critical. That is your slap in the face. It's not even a red flag. It's like a black flag, and it's like the black flag of death. So you don't want to fuck around with that one. That's the one where the floor does kind of fall out if you do lose it. All right, so that's going to do it for this nice little weekly wrap-up. I hope everyone's having a beautiful rest of your Sunday, doing all the kind of things that you want to do on a Sunday. I don't know if you're going to go eat some brunch or go to church, pray to whatever God you want, bear Jesus, bull Jesus. They all love you, but God damn it, whichever one pays you more is probably the one that you want to pray to currently. Anyways, guys, it's been an absolute pleasure to speak with you, and I'll see you in your live stream a little bit later tonight.